Welcome to the Payment Strategy Show. I'm Becky Kopplin, VP of Payments at Rainforest. We help software platforms embed payment processing into their core product to grow revenue and improve customer retention. And I'm thrilled to have here today with me Adam Flemming, who is the founder of Cubby. Adam, thank you so much for joining me.
Thank you. I am delighted to be here.
So let's start with an easy one. Tell us about your background. What inspired you to found Cubby and kind of what made you realize storage facilities needed purpose-built software?
Yeah, thanks a lot. Cubby is actually my fifth startup. I didn't think that there would be five. I thought maybe four, maybe none, maybe one. My first startup was not even an idea more fully formed than the idea that I didn't want to take a job at a big company or any company. But I had no plan, almost no talents. And I think the consequence was to be expected. My second startup fell naturally out of my first startup, which was my best client at my first startup, said, Adam, why are you wasting your life with no plan and no idea? You actually do have one talent, and the work that you did with us was very good. We're like a real startup with a future. How would you like to have a future at the startup? I thought, you're right. Let's do that. And that was called Triage Wireless, later became Sotero Wireless. And that was a really neat concept. It was an ambulatory wireless blood pressure monitor, which sounds like something you might have on your Apple Watch. But actually, to my knowledge, ambulatory blood pressure is not offered by any of kind of the personal devices. And this is still a pretty novel technique. But it wasn't to be. Actually. Life demanded a cross-country move from the West Coast to the East Coast. And I decided to take some regular jobs. I spent my time in finance. I did two about 5-year tours of duty at Goldman Sachs, an investment bank. But at the time I joined, I had no idea what an investment bank even was. But I learned, and there was kind of a period of time in which, certainly when I joined, the bank was expanding and opportunity abounded. Every place you looked, this was immediately preceding the mortgage meltdown, collapse of Lehman Brothers, and many interesting things that kind of changed the nature of the work from kind of more exploratory into maybe more focused on regulatory compliance and reporting. At that point in time, I decided to leap back into the startup market. And I was quite passionate about real estate. And I connected with two gentlemen who had a startup called Urban Compass. And to be honest, I wasn't sure if the idea is a very good one, but the gentlemen themselves were incredible. And I was sure that they would be successful at whatever they put their minds to. And I wanted to be on that boat. And I would say that that was maybe the first time in startup that my judgment was correct. They were successful. Those guys were Robert Refkin and Ori Alon. And that company became Compass, which is now a serious, maybe the biggest national residential real estate brokerage. What I learned from that was that, one, I do love real estate, and two, retail is not for me. I really prefer commercial. So startup was immediately succeeded by another one, startup number 4, called Honest Buildings. Honest Buildings was commercial real estate software. I really like commercial, and I liked real estate. And Honest Buildings was basically a project management and bidding platform that was acquired by a company called Procore. That was a huge SaaS IPO. And after Honest Buildings, I actually went back to work in finance for a couple more years. I had a great time, and I felt like there was nothing in startup scene, certainly in New York, that spoke to me at that time. And this is the point at which I came to Cubby. And Cubby was perhaps my most analytical decision about where to spend my time. I met a group of investors that were very focused on SaaS and vertical SaaS in particular. And they were so passionate about vertical SaaS that they decided to do research in the various industries domestically that had the potential to support great outcomes in vertical SaaS. When I met them, I wasn't quite sure exactly in what capacity I would work with them, but I said, this idea is very good and I'd like to see the research. I was just so thrilled at the concept of first seeing if there's water in the pool before you jump in, because I had jumped into a pool 4 times and it was just so frustrating to get to year 3 or year 4 and realize, the water is only 6 inches or, there's just like not much here. And the idea of doing the research first and then following through on the swing, which sounds really obvious, measure twice and cut once, kind of the opposite is the way that most people get into startup. And so I said, this is amazing. Let me see the research that you've done. And self-storage just leapt off the page. It was commercial real estate, but it was a bit of a secret category of commercial real estate. Most people think of multifamily or office buildings. They don't even think of self-storage. And it's also a type of business that many people assume has there's a single franchisor that dominates the space. In fact, the opposite is true. There's almost no franchises in self-storage. It's fiercely independent owners and operators. Besides checking all the boxes that I had hoped for, interesting space, commercial real estate, big TAM, big market, soft competition, lots of tailwinds. I found a fantastic co-founder in Matt Angfer who runs our sales and biz ops. And I thought, as much as I would like to enjoy the free M&Ms and a cushy FANG job, I feel a calling to return to the keyboard and do another one. So I'm pretty confident that Cubby is the last one. Certainly it's the best
Not
for
not
various
number
reasons.
6 right around the corner?
No, no, no. And if for nothing else, that I looked before I left.
Yeah, yeah, I love that. There was water in the pool. So
Yeah.
you jumped into an industry that you really didn't know personally. I think a lot of SaaS founders kind of like ran a storage company and decided to build SaaS for myself. And so I'm assuming there was a bit of a learning curve for you. How did that process go?
Yeah, that's a great point. And I think that a lot of people believe that self-storage is easy, or that it's obvious, or that maybe a vibe code with, Claude over the course of 2 weeks could, result in a category killer. But the truth is that self-storage is perhaps the most complicated single SKU business that's out there. It involves everything from e-commerce, everything from real estate. It's all there. And I also believed that there would be a relatively short and straightforward build of what would ultimately become kind of the new standard, the new system of record. And it turned out that there was some unexpectedly hard things. It took us a long time to build a really high quality piece of software that had modeled the business correctly and could support people in what they wanted to achieve. Probably the biggest surprise was that a full blown ledger is necessary in order to be an effective system of record. The style of accounting in self storage is not out of a textbook. And there are varieties. We joke that when people say that they're doing accrual basis accounting in self storage, what they're actually doing is cash basis accounting. And when they say that they're doing cash basis accounting in self storage, we say, well, probably that means they have a fanny pack. And in the fanny
Like
pack,
literal just cash.
yeah, they're like, yes, I have a fanny pack of cash and I try to make sure it's not empty. Okay, got it. But it's inescapable, actually. You need accrual. You also need cash. Even the concept of, I have a security deposit. This is kind of an accrual concept. You're not selling, labubus or screws. You're selling rent. And rent is kind of an accrual concept, although it can be done in a cash kind of way. So all of this comes together. Basically, this was the surprise, is that this is actually complicated. It's nuanced. Doing it right at the beginning that gives you compounding benefits. Doing it wrong at the beginning is a compounding curse. And that's very difficult and expensive to solve. And you can see that this is true because every person or company that has ever figured this out, dialed it in, now is a name of facility management software in the self-storage space that whether it's SiteLink or Rednova or UnitTrack. These are folks that have found a way to represent self-storage in the accounting system. And then the full fractal of what becomes, business support software is really rooted in that. You have to be able to process a lease, a move in, a move out. You need to prorate on move in. You need to prorate on move out. You need to account for discounts correctly. If you don't have that, you don't have anything. If you do have that, you've won the right to do more. Help people on how they represent themselves on the internet, serving customers better, adding efficiency to the operations. But you have to start there. And that took us a lot of time. It took us almost 2 years to get that cooked correctly.
And when did you know that you had a winning strategy here? It sounds like you knew the ledger was going to be complicated from the beginning. When did you know or start to have inklings that you'd gotten that right?
This is something that is basically I found to be always true in startup is you never know how close you are until you have the benefit of hindsight. You get very little feedback, except once you start to get feedback, you're actually done. And that's somewhat true here. I would say the the feeling that we had checked the box, certainly on accounting, was basically when people stopped asking questions about it.
Hmm.
And the conversation around how our software could help people was elevated to, hey, are you actually keeping track of this in the right way? To, I have a problem in here, or I wish that I could convert customers faster, et cetera, et cetera. These are all higher order, higher value problems that you can only consider once you've kind of really solved the basics. So I'd say that the nature of the conversations went from like, de-risking Cubby's software to strategizing around how we can support people to be more effective operators.
I love that. So the indicator that you'd gotten it right is kind of a request for more, not fix the basics, but expansion.
Yeah. I think maybe the most powerful indication is when people would ask us questions about, hey, do you do this broken accounting technique that I've learned from our competitor's accounting system? And we had the opportunity to actually be consultative and helpful and say, in fact, this is a broken accounting technique. It hurts you in a number of ways. It inhibits your ability to accurately represent your business or to move prices at the time or in the way that you want or to serve your customers. We do it in a slightly different way. And, these are the benefits. And they would say, that's amazing. I had a muscle that I had wanted to use and I haven't used it for so long. I forgot it exists. And Cubby, you've given the muscle back to me. And I thought, that's fantastic. It means that we've really done it right.
I love that. And so you talk a lot about accounting and ledgers. When did you decide to add payments to this and how did you approach that?
Great question. The SaaS gods have blessed self-storage, and there was never a time when payments was not part of the equation. The
Started there
idea
from the
that you would
beginning.
take the idea that you would take a payment in some other system is just unthinkable. It's so difficult to keep a separate payment system in sync with the self-storage subledger as, in my opinion, to be basically impossible. You have to be a master of several domains to do this right. And this is not the thing that self-storage operators want to be expert in.
So you never had to go do kind of that greenfield selling of like, here's why you would move away from your separate, your separate payment solution. It always made sense. Again, it sounds like because
Yeah.
accounting and ledgers are so core to it.
Yeah. And I think that's part and parcel of actually, being a foundational piece of software is that we feel responsibility for our clients' success in the end. And their success knows no boundaries. It's not like we only help you with this one easy thing, but the hard stuff remains yours. All of their problems are our problems. And we've been really able to help people by ensuring that there is no daylight between the payment system and the accounting system.
Like that phrasing. When you started kind of looking for payment providers, right? Kind of that connectivity, since it sounded like you needed it from the beginning. What surprises or positive, negative experiences you had kind of starting that path?
Absolutely. Payments is a space which is so full of middlemen and layers. It can be impossible to be a good judge of what your partner really will do for you, what capabilities they have. To be honest, I don't know of any way to shortcut that learning except maybe to find a friend or an expert that really knows. And we, like many people, went on a painful journey. I will not say the name of the company that we started with, but we thought we had found the right partner. And we did a multi-month integration into our system. We went live with our first customer and payments failed immediately. Acceptance was around 50%. It was horrific.
Percent.
50.
Wow.
Imagine having a store where 50% of your customers come to checkout and just no, put the inventory back on the shelf.
Wow.
Please go outside. It's unthinkable. Business is
Yeah.
closed. And we, under great pressure, under duress, scrambled to figure out how could this be happening. And what we discovered is that the payment processor that we had worked with, in order to get to the rates that were necessary to serve the self-storage industry, insisted on such stringent per transaction risk requirements that half of transactions were simply rejected in a way where there was no workaround. We went back to them and said, hey, listen, this is
This is a problem.
it's unworkable. And I said, well, we're sorry. That's the only way that we can offer you those rates. And I thought, well, this is very painful to do, but we took it down.
Yeah.
We put our first customer back onto their old software. It took us 3 years to get that account back. We went back to the drawing board. This time, of course, we knew a lot more about what to ask, but we still learned things. We're on our third or maybe our fourth PSP at this point, just learning about what it takes to serve customers well. Getting, I think, like the risk accountability right is really challenging. A lot of PSPs have a model about how they think about risk, who has it, the master merchant, the sub merchant, the PSP themselves, and making sure that that risk is aligned with how you or I should say me, my business is in trying to serve customers is really important there. Misalignments there are basically impossible to overcome, especially once the PSP has scale and you have scale, because the PSP is really entrenched in their style or their way of managing merchants. And if that aligns with the way that you do it, you're going to be very happy. And if it doesn't, you will never be happy.
And that's surprising to me because, I obviously hear this complaint about risk and don't disagree with anything you said. There needs to be alignment there, but I'm surprised you ran into this with self-storage. There's a physical location which is verifiable, right? Like you aren't going to charge back and run off, and not make your payments because the storage facility has your things. So there's kind of incentive. Like it feels very secure. It feels very verifiable. It feels low risk. So the idea that you ran into risk challenges there, it stops me, I guess. Did they ever give you kind of more like what bothers you about this like physical location that's storing other people's things as high risk?
Yeah, it's a great question. Self-storage is unique in that basically every address is a distinct legal entity. And although, in our sales process, and our clients are operators that operate portfolios effectively of LLCs, kind of in the most zero trust, take no risks, underwrite every legal entity separately approach to merchant
Mm,
management. Every single self-storage facility is going to be a new person that you kind of conceptually, it's a new risk that you have to understand from first principles. The truth of the industry is that the risk really lies in the operator, not in the LLC. But there's legal and regulatory requirements where you may or may not be able to take advantage of the knowledge that there is, in fact, perhaps an ultimate beneficiary or a UBO who is, in fact, doing the accounting, is in control of the LLC, and is the real risk. Not being able to take that information into account in the underwriting process creates obstacles to onboarding that they're just very difficult to work around. But if you take a step back and see the forest from the trees, I'd say that there's a lot less risk in self-storage than you might think, very different from e-commerce, say.
yeah, absolutely. If, besides, making sure you're aligned on risks, which sounds like a great place to start. If our listeners are saying, "Hey, how do I kind of learn from Adam's, bad experiences with processors or whatever that looks like?" How would you explain, some of the things that people can look out for, questions they can ask to kind of avoid maybe partnering with some folks that aren't going to serve them well?
Great question. Yeah, I think a lot of choosing the right partner in payments depends on, honestly, it depends a lot on where your business is at. And let's say that there's a couple different scenarios you could be in. One is that you're in a scale up where you happen to have a small business, but for whatever reason, you anticipate it getting very large. This is a unique situation because your needs will change a lot as your account grows. And it's just a different pairing mating problem where you're like, okay, I want to find a payment processor that can help me where I am, but also be with me where I'm going. If you're in stasis, it's a somewhat an easier problem. A very large GMV, you're likely to find many people that will help you with this. Probably your principal concern is just rates, and you'll get professional services as part of your contract that will help to migrate from whatever you're on. So that's really kind of a migration problem and a negotiation problem. Where we were was, and again, if you're small or if you have a high margin business, there's a lot of things just off the shelf that will help you. If you can eat 4, even 3% take rate that doesn't go to you and you don't want to monetize payments, there's a lot of people that will help you, but you're leaving a lot on the table as well. Our situation was that our account was small and not interesting to people in the present, only interesting in the future. And so a lot of the difficulty, or I should say the challenge in finding the right partner is really selling your business to the payment processor because they're going to have to overinvest relative to your volume for you to be successful. And they need to believe in where you're going. That was very challenging in the beginning. We didn't have even 1 penny of volume. We just had to get somebody to take a bet on zero. And
Right.
zero is a tough place to start from. A growth trajectory or growth curve is people can extrapolate from, etc. Yeah, my best advice just to directly answer the question would be find a friend who has suffered, ideally suffered greatly. And this person will have a relationship that you can piggyback onto. Just, going through the front door and taking a number, it doesn't even matter which company you're at. You can get lucky and you can get unlucky. And I think that's, yeah, the front door is a tough place to get in.
So, besides this kind of misunderstanding, maybe growth potential, what do you think payment processors get wrong when they're serving vertical SaaS businesses?
Interesting. I mean, Becky, I would also be interested in your perspective on this because I feel that payment processors have incredible and asymmetrical knowledge and understanding of payments. And I imagine as a tautology the people that the payment processor is working with, the clients, the vertical SaaS companies, are incredibly knowledgeable about their industry and their clients, but know almost nothing about payments. And the challenge is really, I think, education. It's serving somebody in the way that they want to be served, but also reframing their needs to what is achievable. I am still uncovering things about payment processing that are just false beliefs that I had about how things work or how they're connected. I think disavowing people of false beliefs about how payments ought to work and then serving them in the way that they want to be served. This is two parts of a problem. First, bringing people into reality. What is your job as the merchant, as a payment processor, as a client? Who's responsible for PCI? Some of these questions, they just like never get answered until very late in the game. And people are surprised by this. So in some sense, it's setting expectations and educating people, and then, of course, delivering. But if you just look at like at a very fundamental level, a card is going to be presented, and a decision must be made about whether or not to accept it. And there are dimensions of quality there. But to the extent that payments is commodity, what remains? It's the stuff around the administration of payments, how people organize themselves and set expectations and ultimately take risk and ownership.
I think you hit on an important part, at least for us, which is the software platform knows their industry in a depth that we
Yeah,
can never understand, and we get payments right in a way that
yeah,
maybe that platform would understand, and how do we bring that together? And it's actually part of kind of why Rainforest exists, because I've ran payments and software platforms, and I've
yeah,
worked on vendor sides and done consulting. And we found what you found, which is this kind of painful journey of working with payment processors. Even being relatively payment knowledgeable was
yeah.
challenging. And so we're trying to solve that. And I think largely are finding ways to do that with what, custom risk data, for example. And maybe I put that into two parts, kind of that understanding element you talked about from the beginning, which is let's make sure we agree on what the risk profile is here and how we solve those major challenges. And I think every industry has something like what you just said, which is you talked about, kind of these, the ultimate beneficial ownership, operating these little LLCs that are one entity, but from a strict merchant services view, that's not necessarily how they see that. So how do we align there? And then two, on a merchant or transaction level basis, how do we share back and forth information that make each other valuable? Hey, this is a return customer. Hey, this is a deposit. Hey, this is a merchant that's associated with these other 8 merchants, and use kind of that custom data to do that. I agree that kind of how do we marry these two sides of this conversation together? I think that's where we can really start to maybe remove some of that real painful element that exists when adopting payments.
Yeah, that's a great point. I find that having that conversation as part of a sales conversation just makes it much more challenging, if that makes sense. Like, in some sense, there are processors out there that are easy to access. You can take a credit card immediately upon sign up. And what's happening there is that basically a decision about how your business actually works and like real engagement comes much later relationship. And my experience there is that there's almost like a test during the sales process to see how much do you, as the SaaS company, how much do you know about payments? If you don't know a lot about payments, it's almost in the processor's interest to not educate you, because this creates margin, so to speak. And to some extent, a salesperson really helping you understand what the layer cake looks like, where there are opportunities to create or take margin, is working against themselves. All of the portion of the layer cake, which is not understood by the vertical SaaS company, is margin for the payment processor. And I just think that makes the best salespeople are consultative enablers in the context of the tools and the stuff that they have available. To the extent that information asymmetry, I think, creates margin. It makes it difficult to fully engage on the consultative part of the sales relationship.
Yeah, so if folks are thinking and they're listening to this and like, okay, right, my answer to solving this problem is either go through a lot of really painful attempts at integrating, which feels like not a fun path, or go find somebody, right, who's gone down this really awful
Yeah.
path and kind of learn from them. But is there anything else, they've got the sales demo set up with a PSP tomorrow. Can they ask different questions? Can they get in front of different people? Can you kind of pull the veil back a little bit on this, or anything that you've found that works along that line?
Sure. One of the first things that we struggled with, and not everyone will struggle with, is that self-storage is very aggressively underwritten. The low rates that many operators have, it just creates a barrier around what payment options are available to them. And it also eliminates lots of easy on-ramps for us as the vertical SaaS provider, where we could say, look, we're just gonna accept, 3% and 30 cents per transaction just to get going, because even if we made nothing on a payment, this would dramatically increase our end customers' costs and it would make Cubby non-viable. They just cannot use the software because the embedded payments are too expensive. And so to the extent that there is an asymptote or a target that you have to hit in order to serve customers, I think it's helpful to be upfront about that and just get that off of the table as quickly as possible. Once everybody agrees, yeah, we have to do this or nothing, it creates a simple first base. Is there any world in which this is possible? If yes, let's keep going. If not, nothing to do here. And not everybody has an asymptote. If you don't have an asymptote, then you're kind of just looking at market and fine. The second question might be around what is the style of processing? What's the cardinality of merchant IDs to customers in your business? Are you creating one merchant ID for, an entire franchise? Do you need a merchant ID for every retail location? What is really the definition of merchant in the software and at the PSP? This creates just an understanding of kind of what kind of work and who will be responsible for the work of onboarding people. And then to the extent that, the relationship between companies and locations and customers in the vertical SaaS software is reflected in the payment processor software, this is going to be helpful and will make it easy to talk with your PSP about everything on an ongoing basis. I think for many people, reporting is probably a critical dimension of quality. For my business in particular, it's not really actually. I'm responsible for all of the reporting that goes to my customers. And so reporting from functionality available in the PSP is not really a thing, but I think for many people it is. And especially kind of like a 1-0 thing is, will the ultimate customer have exposure to the PSP? This is a big thing. And what will that look like? Will it be do you have to create a duplicate set of user accounts in the PSP software? Are those actually connected in any way to the vertical SaaS software? Is there any type of SSO or IDP thing? How will the customer ultimately get access to the PSP or to the PSP's software? That can have a big impact on how people perceive the quality of the payment stream. And I don't know how it is really possible to answer this, but it's a good question to ask, which is the most important single dimension of an end customer's perception of the quality of the payment system is determined by the frequency and the response to payment failures. So you have a customer, you did everything. You hired a marketing agency, you paid for click ads. Maybe you're paying an aggregator for leads. You have some form of paid customer acquisition. You staffed your business. You got the website developed. You bought the vertical SaaS software. You did everything. And the moment of truth is upon you. A real flesh and blood customer stands before you. They want to buy something. They've got their credit card out. The credit card just worked down the street, Walmart or on Amazon. And for some reason, the payment is not being accepted. This is really bad. But it will happen. And when it does, what is the consequence of the payment failure? The best possible thing that can happen is a totally clear and unambiguous message about what options the merchant and the customer have. Is the card never going to work? That's helpful. Bring me another card. Will this card work if you call your bank? That's helpful. Is this card not working because of a misconfiguration in the payment processor? This happened to us several times where the merchant category was misdefined and purchases were rejected as basically so suspicious as to be rejected by the PSP. All of these things can happen, but just remember that in that moment, when a customer stands in front of the merchant They want to pay, the merchant wants to accept it. Any reason why that payment can't be accepted should be immediately explained in clear and unambiguous language as possible. You can or cannot pay, and in order to pay, you must do X. This is actually, to my mind, a big difference between mini PSPs, and I'm sure there's a trade name for this. It's effectively a mapping of system errors onto user-facing actions. And of course, system errors can occur in any number of places, all the way from the card networks themselves, through the PSP software, through the application software. And to the extent that there has been work put into mapping these errors into direct and user understandable actions. In the case that a payment is not accepted, this mapping library is extremely valuable. It's difficult to judge in a sales conversation, but it's a good question to ask. Is like, okay, payment failures happen. How am I going to interpret the failures that I receive? Where do those come from? Like, does the PSP take responsibility for interpreting payment failure error messages into user-facing messages, or is that an exercise left to you as a vertical SaaS company? Unfortunately, this is kind of horizontal work, and I feel like categorically, as a vertical SaaS company, your time is probably not well spent creating this mapping library. So someone that brings a high quality one to you is valuable. It's a big job that you don't have to do.
Yeah, I love that. And it really impacts you in kind of the most direct way, like that moment, right, that the payment's being made, right?
Yeah.
Like that's a reflection of that quality and commitment to the experience because that's what your merchants care about the most, right? Which means that's how they're gauging quality.
Yeah. So much, like an unfathomable amount of work has been done to get to that moment. And the value of everything you've done can be just like multiplied by zero by a bad error message.
Yeah, yeah, declined.
Yeah.
Yeah, I'm with
Nobody's
you.
responsible. Everybody's responsible.
Right. The layered cake kind of bites
Yeah.
you there too, right?
Yeah.
Awesome. Let's switch gears with our last few moments. Let's talk about AI. How do you see vertical software companies kind of incorporating AI? And have you started down this journey in Cubby?
Absolutely. Let's refine the question a little bit. And there are many examples of people incorporating AI in various different ways, and there's all kinds of application of it. Is this more a question about what are we seeing, about market structure? How do we think about it? What do we want to
Just
dive into?
curious. I mean, answer it however you'd like. I would say, AI being kind of a really generic phrasing. There's so many ways to go about it. How are you thinking about it at Cubby?
Sure. So, first things first, take out all of the magic of AI, a robot talking to you or understanding things. Eliminate the details of the technology from the perspective of technological change over, say, decades, maybe, where we've been and where we're going. No question that the rise of LLM style AI is a defining turning point. And separating out for a moment what the technology can do, I would say one thing that has benefited all vertical SaaS companies and software writ large is that AI has really expanded everybody's understanding of what technology is capable of. What can it do for you? How can it help my business? And not everyone has realistic expectations, certainly not with where the technology is at right now. But I think that engineers, business people using their imagination about what is possible is unquestionably a boon for software. It creates a perception of value in what software can possibly achieve that's just incredibly invigorating. And I think it's bringing everybody forward. Whether or not what you think AI might do for your business actually can happen now or in the future, people using their imagination about this is creating a lot of great conversations and just ideation about what can be achieved, and to be very pointed about where I feel like SaaS software has historically been is in some sense just people's expectations were that it's a database or a spreadsheet. And what they expected from SaaS software is that it kept an accurate record of business. And the quality of the software, in some sense, was a function of the degree to which the software didn't get in your way. And that's a pretty low bar, actually, and not very exciting. And I think it left a lot on the table, even in the world before AI. But now that AI is here and people are seeing amazing things on their phones and in consumer software, this is really pulling us into a place where I think people see the potential of software to really help you in your business, to make money, to save money, to serve customers better, to do the work that you as the entrepreneur want to do and eliminate the toil is incredibly powerful. What happens as a result of this? And where are we? No question in my mind that we're in a bubble. And it's important, I think, to draw parallels to maybe the largest bubble that our listeners may or may not have a direct experience with, the dot-com bubbles. I was living in California at the time. I got to see a bunch of this stuff up front. I wasn't old enough that I really meaningful participated in the dot-com bubble or the dot-com boom. I was more a spectator, but still there's lessons there and parallels we can draw. I won't dive too deep into that, except to maybe look at one thing. In the dot-com boom, there was a lot of focus on what are the picks and shovels that are going to enable dot-com businesses. The conception of what dot-com meant, what the internet would become, wasn't totally clear. And as a consequence, maybe as in realization of its potential, there's a lot of investment in the stuff around it, and like bandwidth and network hardware and like Cisco and these types of companies were very hot and part of the bubble. And I wonder somewhat to what extent the foundational models, Gemini, OpenAI, Grok, do these become the cable companies of the future? Is AI like the internet? It's assumed. Everybody has it. And it's like kind of the same, and like maybe you can pay more for more megabits, but having internet is not the creation of value. It's a catalyst for value. And I really, when we think about how to apply AI, choosing the right model or like paying extra for like the latest LLM, I don't think this is the edge. This is temporary, and this is part of the flotsam in getting to where we're going. The application of AI is really where the magic lies, and this is where we focus as well. What are the real problems in your business? And automate everything is not actually a goal to my mind. Clients, when they're most animated and enthusiastic about what software can do for them, what we hear is not automate everything, or that I want to be sipping a martini and have my business magically run. This becomes a race to the bottom. People are ambitious. They get into self-storage because they believe they have something to offer, an edge. They're real entrepreneurs. And what are they universally short on is the time, the space, and the tools to express what makes them unique and what they think will elevate their business. Why are they short on that? Toil. They're spending time on stuff that everybody has to do. Sending invoices or chasing collections. This is stuff that's not really differentiating your business. It's a requirement of any business. And people are excited, of course, about automating away the things that are not differentiating. But I think the space that's left there is much more interesting, which is how does assume that AI will take away the toil. How do you do what's differentiating? How can it help you? This is perhaps the most interesting space. The stuff that's eliminating toil, I think, at this point in the AI cycle, which is far from over, is obvious. AI can help with collections. AI can help with sending invoices. AI can answer calls. It's obvious. People expect it. And getting it right is challenging, no doubt about it. There's still art in software. But the most interesting thing to my mind is what remains. What is your edge as a self-storage operator, and how will AI help you?
Really, the right way to think about it is, how do I focus on what's engaging to me, what's interesting to me, creating space for what differentiates me, and kind of remove those things that are, I think, the toil being a really valuable word there, and think about AI
Yes.
and how it solves that.
Yes, absolutely. Assume the toil is eliminated. This will happen. What's left?
What's left? Awesome. Well, impossible question time for you. 5 startups later and lots of painful payment processing experience and great ideas around where AI goes. But if you had to distill all of your experience and wisdom, kind of one piece of advice for SaaS leaders who are listening today, what advice would you give them?
Absolutely. I think that conventional wisdom in software is to listen to your customers and iterate based on their feedback. And I don't think that's true, actually. Definitely, you do need to listen to your customers. But often what you are hearing is an immediate concern, which has elements of the ultimate underlying problem, but often won't speak to it directly. And the thing that has really served us, and it's something that I feel like I've personally been working on across those 5 startups, is taking the feedback, taking a step back and thinking about what people are really saying, being absolutely ruthless and challenging every assumption that underpins why that might be a problem. Starting with, does this problem even need to exist? Can it be structurally eliminated through a new process or way of doing things? And then, in some sense, creating the right tool or process or innovation, ideally to make a problem that people have impossible. If you can't do that, maybe make it automatic or easy or distill it to its essence. And I think repeatedly applying what I call the 5 whys, starting with why did they say that? Why did they say that? Getting to the root of the problem and then reconstructing what you need to do is likely to result in a piece of vertical SaaS software, which is differentiated, it's unique, it's innovative, and people will really appreciate the fresh approach to solving their problems.
Love that. Thank you so much, Adam, for sharing that. And thank you for joining us today. Really appreciated having you.
Thank you, Becky. Great to see you. Appreciate the great questions. See you soon.